Good morning and welcome to my YouTube channel. My name is Phil Grandy of philsgang.com and Phil's Gang Radio Show. Okay, we're back from vacation. The holiday is over. We're in our last day of the so-called Christmas rally. Some Christmas rally that's been. So everybody keeps talking about this October low. That's the base. It's not going to go any lower than that. Yes, it is. Here's why. Because of our corporate debt. Nobody wants to talk about it. What drove the stock market up from 2008 to 2021 before it collapsed and went down, the NASDAQ down 38% and the S&P down 20%, was QE. What was QE? That was a word they used to mask the truth, inflation. Remember all the stimulation, print money, zero rates, so corporations go in and reduce the amount of shares they have outstanding to push up their earnings and to push up their profits without having profits. Didn't need them. It was all artificial. The more you reduce your outstanding shares, the more the earnings go up, the more you're pushing the profits up. And so it's prosperity without profits. What he is doing behind the scenes right now, he wants to go back to QE. Because who does the QE benefit? It benefits the very, very wealthy, their assets. It doesn't benefit the guy on Main Street. The only asset he has is his job. His house is already tapped out. His 401k's tapped out. His credit cards are tapped out. Not going to help him. But they didn't give a damn about him even in 2008 when we had this unbelievable 1,200% rally, which made the very wealthy even wealthier. Let me show you something on the chart. This plan that he has, reducing the balance sheet by $2 trillion, is not going to fix this either. You think he's going to be able to go from where this is now, right here, and drive this right back up to here? It's insane. There's too much overhang. And the big problem is these corporations that nobody wants to talk about on any of the financial shows. Those corporations are heading in for a big crash. Big crash. Those stocks of those companies for 13 years have been going up without earnings. So, yeah, not only are we going to take out the October low, we're going to take out the 2020 low, we're going to take out the 2018 low, and right here is where I told you the crash was going to begin. Told you it was going to take time. But from 2008 to 2018, after 10 years, I identified then when I called this market back in January 2018, I said, hey, it's over. Too much inflation. And right here is where they stopped putting the inflation. Remember, this little crash we had right here, the market went down in 16 weeks, 22%, then rallied, remember, about 54%. And this market right here, this crash in 2020, went down 31% over 5 weeks, and then went up 122%. That's over. See? And from 2008 to where we are here, 2018, this is all QE. They had to stop it right here. No more. It's gone. They can't bring it back either. And that's why you saw the market collapse from November to where we are today. And it can't make its way back out. It's just impossible. So that's where we are. So you better learn how to sell short, okay? Because this market, okay, it has only one place to go. Lower, much lower, okay? Remember, they did the same thing in 1929, okay? They thought the bottom was in. When they were down about 20, 28%, 30%, it went down 80%, and we're in worse shape now. But one thing we have in common with 1929, they had the same situation with their corporations. Debt, 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 debt. But we're far worse shape now than where they were in 1929. But nobody wants to talk about it. We do. So remember, please learn how to sell short. Don't sit there and keep buying on the dip until you lose all your money. See you on the chart. Join my gang, philsgang.com.